Okay, welcome all to join our webinar sessions. Today is about US market. Okay, where is the US market heading to and key macro signal investor must know for today's sessions. Okay, so thanks for joining, especially during after work hours during weekdays. I believe it must be a very tiring day for you all already. But let me hopefully whatever I shared today is useful and benefit for your trading journey. Right, but before I will kickstart today's sessions, let me have a small introductions for our company first. All right, but before that, let me have a small disclaimer here. For presentation today is not reviewed by Security Commission and is for general educational information sharing only. Does not constitute any buy and sell recommendations. So whatever I share later is just for your own reference. And if you want to have a more details buy and sell advice, you can look for your own dealer, own reminder, or maybe can schedule an appointment with us. Okay, so let's talk about Phillip Capital. Phillip Capital is a company incorporated since 7 October 1995. And in Malaysia, we are not only trading participants of Bursa Malaysia Derivative Berhad, participating organizations of Bursa Malaysia Security Berhad, but also one of the holder of capital market service license, meaning that we have the license to offer stock trading, CFD trading, and also futures trading. Right, so have a look for our Phillip office nationwide. In Malaysia, we have our headquarters located in Kuala Lumpur, and across East and West Malaysia, we have total 11 Phillip Investor Center, which is our branch office. So since today's session is online, and maybe after today's sessions, you are interested to explore more our service, perhaps you can drop by for your nearby branch to look for our dealer or to schedule an appointment with us so we can assist you better. Okay, so in 2024, Phillip Capital Sdn Berhad is a pleasure to win as champion in Best Retail Derivative Trading Participants and second runner-up in Best Overall Derivative Trading Participants. Okay, so yeah, with a huge client base and consistent client base, so we're able to get these awards in futures trading. So for global networks, yeah, Phillip Capital operating in Malaysia, but our parents company are in Singapore. But doesn't mean that we only serve operating in both Singapore and Malaysia only, but we also having our business and our client in international. For example, France, Turkey, Dubai, India, and other overseas countries lah. So for global coverage with Phillip Capital, what country and what exchange you can trade is not only limited to local Malaysia, but also some other foreign country, for example, Singapore, Australia, Japan, Germany, UK, Hong Kong, and the most important one is US. So here is why we can become your one-stop solutions for trading. So across our product offering, we have futures, we have stocks, we have also CFD. So we look further detail into futures. We can say that we're offering the most comprehensive product that available at the market. For example, index futures, agricultural, metal, energy, cryptocurrency. So we believe that that's any one product that might suitable to your preference and also risk horizon. So if you're interested, maybe can schedule an appointment so we can advise which product is more suitable for your trading lah. And in stock, we also not limited to Malaysia shares, but also in US shares, Hong Kong, Singapore, and Australia. And for those traders or clients that you look for more leveraging in stock trading, we'll advise or suggest you go for CFD, okay, which is contract for difference. The instrument is a little bit similar with stock trading, but it requires with more leveraging. Okay, the risk is bigger, the return is also bigger, as well as is a potential losses. So in CFD, we also not offering local Malaysia, but also US CFD. So here is why we can become your broker of choice. Okay, as I mentioned just now, Phillip Capital is an award-winning multi-asset broker. We have a very long established record in servicing clients and help them in brokeraging business. And we also having 24 hours booking and execution support. So if you're trading a foreign country, for example, in US, so you no need worry that there's nobody to assist you during midnight. Okay, we have 24 hours dealer that are available for support. So anything you can just call in our night desk for immediate assistance. All right. So other than that, we also have latest market news. So whatever, so similar that we doing today, we were constantly doing webinar and seminar for educational purpose for our client to make sure they're up to date to the markets and what array of product. Okay, especially in stocks and futures, we believe that most of the instruments that are available in the market are covered under our offering lah. So, and the another one, which is the most important, is our platform is our in-house platform, and there's no any platform fees. Okay, so if you want to become our client, you want to use our platform to trade, don't worry, there's no any charges for the platform usage. Okay, so if you are a beginner or you are the one that who only want to start exploring your investment or trading journey, we also available for one-to-one coaching. Is free of charge. Okay, so in this one-to-one coaching, you can schedule an appointment with your nearby branches dealer or your own reminder. So we include introduction to futures, CFD, and stock trading, advising you or suggesting you the most suitable product according to your preference. Okay, so other than that, we also having product knowledge. If you want to know more about index, commodity, so yeah, you also can catch up with us. And for platform coaching, is regarding to guide you how to use our platform to do trading. Okay, maybe in past time you use other broker platform, but now you want to explore how Philip Capital platform works. So you also can schedule an appointment with us, so we can guide you step by step. Okay, using our platform interface. And another one in charting system is about technical analysis. If you are a technical trader, if you are a technical client that you want to trade markets by using candlestick or this, we also able to help you analyze the market by studying and analyzing the candlestick. Okay, so for weekly market call, yeah, we also available it on every Monday, 11 a.m. Okay, it's regarding on fundamental analysis. Our analysts will present on weekly views and updates as well as a newly published report. Okay, it's regarding market views and updates. So if you have any holding counters that you want to know more about technical analysis, we also available another sessions on Monday 8 p.m. by our technical analyst James. Okay, it's about live counter technical analysis. If you're holding your own stock counter that you have no idea what's the potential technical movement for that particular counter, you also can join in these sessions and just raise it up during the sessions. Okay, it's free of charge, and our analysts will also analyze for you how the counter technical analysis lah. All right. So for another one, we Philip Capital, we always utmost one principle is we want our client up to date with the market. Okay, so they are not lag behind. So for that, we are constantly doing seminar and webinar. Usually for 1 week, we have one at least events. Okay, sometimes we do it physically, sometimes we do it online. So if you're interested, you can scan this QR code, okay, to check our schedule of the series of upcoming events lah. Okay, you can register for that, and all of them is free of charge. If you dial in by your mobile phone and you cannot scan it at this moment, maybe you can take a screenshot. Okay, so after the sessions, after today's webinar, you can scan it and register yourself for the events. Okay, so for online account opening, if you are interested to trade stock, trade futures, or trade CFD with us, you no need physically drop by the branches to fill out the application form. Okay, currently we're available online. So if you're interested, you can scan this QR code on the slide to register yourself a trading account with us. Okay, so after this, maybe let me talk a little bit introduce a little bit more our trading platform. If you're a futures trading client, you want to trade for futures product, we available for our in-house platform, which is Nova. Okay, actually this Nova is a platform, is quite user friendly. The interface is quite simple and straightforward. Okay, and I believe that it's a very friendly for beginner clients lah. Okay, so in the platform we offering over 90 technical indicators, buy and sell directly from the charts. Okay, other than that, we also available trading for local and both foreign products. Yeah, and the most important one, the features that we just added recently, which is Nova AI Trading Assistant. It's an AI helper that available in the platform. So anything, maybe you want to know more contract specifications, you want to know more about market updates. Okay, you can just chat with this Nova AI helper lah. Okay, it's just a similar thing that you chat with ChatGPT. Okay, it's an AI assistant that we offering to help our client in their trading journey. Okay, so in Philip Nova in Malaysia, we are the only one broker that available platform that able to link your trading account with TradingView. So I believe most of the experienced trader that you already have your own setup, your own preference in TradingView. Okay, so you might no need necessarily to log in our website, our apps to log in your trading account. You can just log in your trading account with Philip Capital at TradingView website. So you're able to execute your trades at the website lah. Okay, so for Poyom's platform is a securities trading platform for stock trading. Okay, so if you are a stock investor, so we available another separate platform for you, which is Poyom's. Okay, similar to Philip Nova, is actually a user-friendly platform, and you're not only able to trade for Malaysia, but also US, Singapore, Hong Kong, Australia. And if you are a fundamental analysis investor, we also available those market announcement, company corporate actions announcement. Okay, all the news are available in this platform. So you no need to Google search one by one company at other website. So all is available in these platforms. Okay, so for the investor that you or the client that you're looking to trade US stock, okay, US as the world most famous market, you want to trade US shares or ETF, we now running a promotion which is the minimum brokerage is only from only 3.99 USD or 0.02%, whichever is higher lah. So along with that, we also offering free US live market data, no platform and custody fees, and also weekly market calls. So if you are an investor that passionate in US market, I believe this promotion able to cater you very well because we are one of the cheapest in the markets if you're comparing a few other brokers. Okay, so one last thing before I kickstart today's sessions. For promotion campaign, currently we're running one promotion campaign called Drive Your BND Trades Further with Philip Capital. So this is the first time we're doing a promotion campaign that we're giving out lots of electronic gadgets, for example, televisions, iPads, iPhone, and also a MyV car. Okay, so we have two different mechanisms for both beginner, new client, and also existing client. How can you involve or entitled for this price in this promotion campaign? Okay, if you're a new client, you haven't had any account with us, you can open one futures account with us and execute only one trade on BNB product. Okay, BNB product is Bursa Malaysia derivative, and to entitle 50 trading credit, and to entitle or to participate in lucky draw, including maybe 10,000 trading credit, all this. Okay, you generate a gross commission on Bursa Malaysia derivative product, which is over 500 ringgit Malaysia per month. So you're able to get one lucky draw tickets. Okay, so the promotion is only running until 31st of March. So if you're interested, please hurry up to register yourself and entitle for this campaign. So this campaign lucky draw will be held on 18th of April. So we have a live lucky draw sessions for all the unique client, which is entitled clients. Okay, another campaign, okay, SGX Asian Index Futures. We have a lot of clients that are interested in trading Singapore, China, Taiwan, Japan, Vietnam, and also Indonesia index. Okay, so we're offering a very low commission brokerage, which is as low as 1.88 USD only. It's a very low commission for those clients who are actively trading all these company index under SGX exchange. Okay, so currently this promotion is only will be running until 13th of June 2026. If you're interested, you maybe can take a screenshot or scan this QR code on the slides to scan for more info. All right. So another campaign, mini KOCI future special promotion. I believe those experienced traders, if you already traded before in Bursa Malaysia market, I believe you must know KOCI futures. But now Bursa just launched another mini size contract, which is mini FKI. Okay, so we to cater this promotion, this product offering, we're running another promotion campaign, which is trade mini FKI at just 2.99 commission per lot. It's a very low commission for this mini KOCI futures, and we also available for retail trading challenge. Okay, rank among the top 15 traders and win cash up to 8,888. And the promotion is running from January until 31st July of 2026. If you're a beginner client, I believe mini KLCI is a very suitable product for you. Or if you're already trading in KLCI, I believe this also can act as a hedging tool for you. So if you're interested, you can also scan for the QR codes. Okay, so yeah, I'm speaker for today. My name is Zhenzong. Currently is as a senior dealer with Phillip Capital. Okay, so I will be speaker for today's sessions, mainly covering US market updates. Okay, so currently I'm a dual licensed dealer with Phillip Capital, and I'm also National CFA Institute local research champion. So, okay, usually I'll be servicing client combining market analysis and also technical skill. Okay, to help our client to make informed trading and investment decisions. Okay, so before I really kickstart today's sessions, okay, since today's sessions is covering about US index, may I know how many of you traded, okay, US market before? If yes, maybe you can give me a one or thumbs up in the chat box so I can know. Are you traded US market before? All right, so US index or US market is the world's most famous trading market. Okay, it's a global. Okay, I believe there's an international client or investor that they actively trading or invest their money in US market. So in US market, usually what the benchmark that we're looking for is only three. Okay, the first one is as a slide, Dow Jones Industrial Average Index, which is DJIA, and another one is Nasdaq and S&P. So that's a slightly different among these three index. I believe if you are trading in US stock before, is very familiar to you already. Okay, but for a very brief definitions for what is Dow Jones Index. Okay, it basically trade 30 large or well-established US blue chips company and reflecting the performance of traditional industrial and corporate gains. You can take it as a similar index with our KLCI, which is tracking the top 30 largest company in our country. So Dow Jones is also another KLCI index for US market. So for example, what stock component that available in Dow Jones index? The first one, Apple, Microsoft, Johnson & Johnson, Goldman Sachs. All these are blue chip, large, and also very well-established companies. Okay, you can take it as a very good quality, very good blue chip, and they are large in their market cap. So Dow Jones is one of the index to track overall US market performance. Another one, we have also S&P 500. A little bit different with Dow Jones Index. S&P 500 track 15 leading US companies across major industry. Okay, widely used as a best indicator for overall US stock market performance. Okay, if you're scrolling social media or those, I believe you saw a news before that S&P 500 will maintain a consistent growth rate among many years. So that's why, because it includes top 500 leading US company in each index benchmark. So for example, those mega tech company that you see usually, for example, Apple, Microsoft, Amazon, Nvidia, Alphabet, all these are also available in S&P 500. Okay, so if you're investing in S&P, basically you're investing your money in all these blue chip stock already. Okay, so you considerably more safer, more consistent products or index performance. Okay, another one, Nasdaq Index. Okay, Nasdaq Index, it tracked over 3,000 stock listed on Nasdaq exchange, heavily weighted toward technology and growth companies. Okay, so usually you can take it as an index to track or include technology company in US. And for example, the Magnificent Seven, Apple, Microsoft, Nvidia, Meta, Tesla, Amazon, all these are also the most weighted component in Nasdaq index. Okay, so if you see there's a many technology company spike out in their share price, so meaning that Nasdaq share index also will most likely will follow accordingly lah. Okay, so I believe especially for those beginner clients, you can understand well what this index stands for. So let me talk about the factor that are affecting US market. So currently you go through a lot of news at social media or newspaper. There's a very volatile market environment recently. US is having war with Iran, Israel, the rates cut, the rate adjustment by Federal Reserve. So all these factors will actually affect the US market movement. So what's the reason behind, okay, or what's the factor that we need to keep a look, okay, or to keep our eye on to if you're holding US market product, okay, factor that most likely will affect for the first one, interest rates, okay. Interest rate is you can study or take it as a OPR rate in Malaysia. So interest rate is in futures. Okay, it was set or decided by Federal Reserve in US. Okay, basically they will constantly or periodically adjust interest rate. Okay, maybe they make it higher or they lowering down the rates. Okay, so the reason behind why people say interest rate is so important to the markets, because higher rates will usually cause the stock usually drop. Okay, because there's a raising in borrowing costs and also valuations. Okay, so if market is very cool, it's not okay, is we need some heated money circulation. Usually Federal Reserve will lowering down the rates and encourage people to borrow money from the bank to do business, to invest their money in stock market. So if you see Federal Reserve to going to lowering down the interest rate, most likely or usually will cause the market to have a bullish move. All right. So another one, inflation. Inflation is a consumer price index. You can take it as an indicator to track the inflation index, okay, based on consumer spending behavior. It's a determination for Federal Reserve whether they want to set the interest rate higher or lower. Okay, so basically higher inflation is bad for stock. Okay, because if higher inflation, all right, Federal Reserve want to cooling down the overall economy, they will tend to higher the rates. Okay, they want to encourage people to save their money in banks and discourage them from spending their money in economy. So usually, if high inflation will come with a higher interest rate, so people will tend to attract to save their money in the banks. Another one, employment data. Okay, it's an NFP. I believe you're trading gold, is trading XAU, MGC. You must be familiar with this, which is non-farm payroll. Okay, the first one NFP, and also unemployment rate. If there's a strong jobs, okay, meaning that economy strong, but may trigger rates higher because economy is a heated or inflation's periods. Okay, if there's a losing job, meaning that economy is not that good. Okay, though business, though corporate, they tend to not hire people. Okay, so as a Federal Reserve or the US government, they want to secure more and more people have a jobs. They will try to lowering the interest rate down. Okay, to encourage those corporate to borrow money from banks to expand their business. So with the business expansions, they will need to hire more people. So in turn will spike up or stimulate, okay, making more and more people have a jobs. Okay, so another one, the factor that affecting US market is dollar strength. Okay, you see, for recently you can see our MOL ringgit is going appreciate a lot comparing to US dollar. If you want to buy something from United States, or want to traveling overseas, I think now is the best timing for you to traveling to convert your ringgit Malaysia to other country, because our it's become relatively more cheaper. Okay, So why dollar strength, the movement of the US dollar index will affect market movement. If there's a strong or spike up in US dollar, you bet for multinational earnings. Okay, if there's a weak USD, you're supportive for stock. The reason behind is, for example, currently USD is weakening against MYR. Last time you only able to exchange for $1, $1 for maybe 4.6 or 4.3 MYR. Currently it's below 4. So USD is more cheaper and will attract people, okay, to convert their money into USD and invest in US market. So actually, if you want to say it's a weakening USD bet, actually it's not totally, okay, it's totally not. You also will lowering the requirement for people to convert their money into USD and invest in shares market. So you can see if there's a weakening in USD, most likely also will as a support for those international or global investors to flow their money into US market. Okay, so yeah, here I break down there's a pre-Iran conflict and also comparison with 2022, okay, in terms of US CPI, core CPI, okay. So when we're talking about war, people will tend to say, well, there's inflation rising in my living cost, the petrol is going to make it more higher. So luckily we are in Malaysia and we have been subsidized for our petrol or fuel for our car. But in some country without any subsidizations for petrol, usually this petrol or fuel will spike up in price when there's a happening of war. So why will say so? Because most of the exporting or oil producing country are in the geographically area that will be affected by war. So if there's a happening a war, the logistic of exporting oil will be affected, so tightening the supply. Okay, in a very brief or very general economic definition, when supply is less than demand, the price will spike up. Okay, so if the country not able to exporting so much oil to all around the world, so also your cause the fuel or oil price to going higher lah. Okay. So another one to look maybe is Fed policy rate. Okay, you can understand as an interest rate. Okay, so pre-Iran conflict, okay, currently is at 3.75%, and comparison in 2022 is starting hiking from 0.25%. So what we can study from a war happening to the interest rate? If there's a war happening, okay, everything become more expensive. Okay, the inflation is coming already. So as a Federal Reserve or the authority, they want to ensure that the inflation is not that higher. So all of the people or everybody able to pay their living costs at a quite affordable price. So as in turn, they will increase up the interest rate and discourage people lesser spending, or maybe encourage them to keep their money, okay, to cool down the economy. So if you theoretically, if there's happening of war, also will as a catalyst for Federal Reserve to increase the interest rates. So another one, interest rates. Okay, I mentioned about interest rate is the one that will stipulate the overall market environment. So interest rate differentiates expected to narrow. I posted up 2 different charts. Okay, so most likely, okay, if the war is ending soon, okay, we don't know that when the war is going to end, but if the war is ending soon, from macroeconomic study or analyze, we expect that Federal Reserve will tend to cut the interest rate down compared to other countries. So this is the comparison for US Federal Fund rates comparison with other countries. Okay, so if we foresee that the US economy is not doing that good, okay, if the war is ending, the inflation is under control, they will try to lowering down the interest rate to encourage people to spend. So that in turn, if there's a lowering requirement of borrowing money from bank, more and more people will try to borrow money and invest. For example, last time you need to pay 5% index for borrowing. So if you want to borrow money from bank and invest in your market, 5% is your break-even point. Okay, but currently, if Federal Reserve they lowering down the interest rates, at 3%, okay, people might say, oh, it's more easier for me to break even in the markets. So I will it will attract me to borrow money and start to invest or spending in economy. So that's the reason why if interest rate is going to lower, we will foresee the stock market also will be have a bullish wave also. Okay, so another one, inflation is a yearly correlations to Goldman Sachs US current activity indicator and US consumer price index. Okay, so maybe in this chart it might be a little bit more a little bit more difficult to understand. Okay, it might be quite technical. Okay, so but you can just take it this CPI consumer price index as the ability of everybody to spend. Okay, if there's a raising in CPI, meaning that more and more people have more ability, they have more pockets money to spend in economy. Okay, so we are speeding up the economic growth, but if there's a over economic growth, okay, too faster so people might not keep spending. Okay, the demand is coming out. Okay, we're also when demand is more than oversupply, also we're making our living costs become higher. So speeding up the inflation. So there's a circle between inflation and interest rate. Initially, they want to lowering down interest rate to encourage people to spend in inflations. But after that, if inflation is too high, okay, the growth is out of control, they will tend to raising up back the interest rates to cooling down the economy. So we can see there's a very high correlations comparing between inflation and also economic growth. Actually, it's a positive growth rate. Okay, if raise in CPI, meaning that raise in inflation and also economic growth, but will in turn have an inverse movement in interest rate, which is they want to, also a positive movement in interest rate. They also want to have a raise in interest rates. So the next one, employment data. So other than interest rates, other than CPI, what factor that I can see to study? Okay, what are the factors that will affect U.S. market? Another one is employment data. So every week, U.S. or United States, they will announce the employment data or unemployment data. So it's about how many people in US they have the job. Okay, so US as a country with the most GDP, they have a most spending power across all other countries. So employment data is a very important indicator for them to determine whether their citizens, their people still have the money to spend or not. Okay, so you can see before November of 2025, there's a gradually increase of employment data, meaning that economy is good, is growing at a very positive rate. Okay, more and more people have the money, but after November 2025, you can see there's a slowing down in economy already. So meaning that those businesses are trying to not expand their business and hire more people, making more and more people being unemployed. So in turn, it also will as an indicator for this authority to decide whether I want to encourage this corporate to expand their business or not. Okay, so as an authority and as a most largest GDP country, they need to ensure that most of the people have enough employment opportunity or enough money to spend in economic circulations. Okay, so this can be one of the indicator. So noted that you can see in the graph. Okay, in October 2025, there's no data disclosed. Okay, because of the U.S. government closure, and there's no any data available for that particular month. But moving forward, okay, maybe you can go to economic calendar or those to check the dates. What's the dates that will the U.S. will announce the employment data? If the employment data is going too far from expectations, you can see the market at that period of time will be very volatile. So another one I want to discuss is US dollar index. Okay, why US dollar index is going to affect market and how is it work? Okay, so basically, what is US dollar index? It's a measure of a value of US dollar against that basket of the major foreign currency. For example, euro, yen, pounds, okay, showing overall USD strengthen or weakness. Okay, so it's a very clear and very straightforward index. If you see US dollar index is going up, meaning that US dollar is becoming more expensive. Okay, it appreciates against other foreign currency. And this is also an index used by investors to track or trade the performance of US dollar relatively to global currency. So I posted a chart here. You can see in the charts before October 2025, the USD is keep dropping, meaning that US dollar is keep weakening. Okay, it's becoming more cheaper. Okay, so you can see our MYR to USD is from 4.3 until to the current rate. I think it's around 3.9 something. This is also the weakening of the US dollar index. So what happening next? We can see the war is happening now. Okay, and at the time during the end of February, the war is starting, and also the US dollar index is quietly having a outward movement. Okay, you can see in the chart. Okay, when the war is starting, there's a rebound for this US dollar index, and you can see there's a blue and red line. Okay, is representing EMA 25 and 50, also forming a golden cross when war is happening. Meaning that if there's a war, it also will making USD become more expensive. So technically, I draw a horizontal line for the resistance of this US dollar index. Okay, so if the war is keep happening and not going to end so soon, okay, because you can see there's a conflict statement from Donald Trump and also Iran. So if the war is going to happen and not going to end so soon, we expect that US dollar also will be appreciated further. Okay, so why war will affect USD to go further? The first one, USD is a safe haven asset. Okay, you have an effect. Okay, for all the people to invest in. Okay, because it's a world main reserve currency. When there's a geopolitical tension or war risk, investors will become more risk averse. Okay, you might think that, oh, there's an increase of uncertainty in the market. I want to park my money in a more relatively safer place. Okay, so US index or US dollar have an effect for this safe haven now. Okay, so people will try to shift funds from risky asset, for example, futures, for example, stock, to a more safer asset, for example, US dollar, treasury bonds or gold. So all the assets will offer a more stable, maybe slower, okay, but it's a more consistent, more stable return of the investment. So this also why people will tend to shift their funds into USD with less war of happening. Another one is global liquidity and trade disruptions. This can create global economic uncertainty, which again push investors towards USD liquidity. Okay, because USD is a widely used currency. You can see the oil, the gold, you also pledge against USD. So with a very great liquidity, it also will attract people to park their money in USD. So another one, okay, US interest rate advantage. If war weakens other economy more than US, capital tend to flow into US asset. Okay, so as I mentioned just now, if the war is happening, okay, so will lead to inflation. When there's a happening of inflation, the Federal Reserve will tend to raise up the interest rates to encourage people to spend more money. So you might see that today US dollar with an interest 3%. But after war or during war, Federal Reserve will going to raise up the interest rate to 5%. You might think that I better to take out my MYR and convert into USD and place into US asset, for example, US fixed deposit, US treasury bonds. Okay, so higher US interest rates from war also will strengthen the USD, pushing the US dollar index higher because more and more investors will choose to convert their money or their investment asset to US dollar. So that's the reason behind. Okay, so other than that, maybe we have a look for this technical analysis for US indexes. Okay, I already explained just now what's the US, what's the Dow Jones, what Nasdaq, and what S&P stand for. Okay, so if you are interested to know more, or maybe you have no idea what's the potential upcoming movement for this US index, so I conclude a little bit technical analysis for the US major index lah. So you can see at the very peak there, okay, it's I draw out a horizontal red line, is a resistance, meaning that I think during February the Dow Jones index once touched above 50,000 and dropping eventually. So during beginning of March, EMA 25 and EMA 50 already form a dead cross. Okay, so for your information, EMA usually is also a technical indicator for us to determine whether the swing movement, okay, of that particular charts is going up or going down. If you see EMA 25 is crossed below EMA 50, meaning that that's a most likely of bearish movement. Okay, so you can see after forming of EMA big cross of EMA 25 and 50, the candlestick or the price is dropping further. Okay, currently it stands at the previous short-term support level around 46,100. Sorry, 45,700 something. So this is the short-term level. If you're a short-term trader, you're short-term clients. Okay, this is the level that the US index need to maintain above to before going more bearish movement. Okay, if the index not able to sustain above this support level, we foresee that most likely will retracing further lah. Okay, so for current positions of the current US movement is a bearish. Okay, obviously. Okay, so, it's in downtrend, and maintaining above this short-term support is a very important. Okay, so if there's a rebound or reversal signal, okay, you can study the candlestick pattern at this level. We foresee there's a maybe a upward movement lah. Okay, so for the short term, what the thing that we can need to monitor is you may wait for a better confirmation or reversal. If you are a long-term investor, you want to park your money or invest your money long-term in US asset. Okay, obviously US asset will going outward across so many years. Once Warren Buffett also say there's better options for you to invest your money in US index rather to give to the fund manager at Wall Street to manage for you, because usually index will outperform those fund manager. But if you are a long-term investor, maybe you can wait for better confirmation when there's a signal before the US market is going reversal to higher price again lah. So what we can monitor is the current short-term support at this level. Okay. So another one, this is for Nasdaq index. Okay, a little bit different with Dow Jones. You can see the Nasdaq index going very bullish in 2024 and touch twice the peak level at 23,000 something. Okay, so you can see I highlighted out two orange circle, which is double top. Okay, so in technical analysis, double top means that bearish signal, meaning that the index touched the highest level, retracing again sideways, and try to go to break the previous high. So you can see the first time trying failed. Okay, second time attempt also failed. So meaning that this is having a very strong selling pressure at this level, and maybe will make it most likely will make it index to retracing further. Okay, all the investors at this level keep waiting and want to sell off their positions, so making the index cannot break above. So but a little bit different with Dow Jones index. You can see Dow Jones index is still maintaining above the current level. Okay, it never go below yet, but for Nasdaq it already break below on yesterday. Okay, so break below short-term support level, meaning that there's more and more selling pressure will come in. So for current positions for this Nasdaq, obviously is in bearish, and there's no any signal for rebound or reversal yet. Okay, so if you're an investor that you want to invest in Nasdaq index, you may wait for a change of market sentiment. Okay, you can see the war is happening, market is becoming more uncertain, and it also will discourage people, okay, to continue invest in the market. They rather to take out their money and wait for better opportunity. So this is the one that we can monitor. Omega technology stock bullish movement, because Nasdaq index is highly weighted by Magnificent Seven. So you can see Apple, Nvidia, Meta, Amazon, all these share price are have a very high correlations impact on Nasdaq. So if all these technology stock is going to have a bullish wave, it also will have a direct impact for this Nasdaq lah. So what we need to monitor for this Nasdaq is those movement from this Magnificent Seven technology company. So other than that, I also want to let you all to take notes. Okay, AI stock went very bullish last year. Okay, you can see Nvidia spike out a lot. Yeah, so and currently the valuations is slowly back to a rational valuations already. Okay, you can see more and more stocks is retracing, and we expect that in this year AI valuation might not be so high as 2025, and the money will flow back to the traditional industry, for example Dow Jones Index. Okay, you can see actually year-to-date performance for Dow Jones and also Nasdaq. Actually Dow Jones is recording a better performance compared to Nasdaq. So that's the reason why the money is so slowly flow in from Nasdaq to Dow Jones Index in this year. Okay, so one last thing for my seminar. Okay, for my webinar, people always say invest long term in US index is always will make you money. So is that real? Okay, I concluded the chart here. Okay, so from historical data, yes, US index will always uptrend. Okay, despite there's a periodically bearish movement, if for example COVID, all these unexpected event, big event, will causing market is dropping. But usually the length, okay, the period of S&P 500 going outward is far more longer than the period of bear market. Okay, so if you are a beginner clients, okay, if you're beginner traders, I will suggest you to invest long-term US market. Okay, at least from past historical data, we can see that US index is always uptrend. Okay, so don't worry if there's any unexpected event and causing market to drop. So it also depends on the strategy. Some people will have a DCA approach, which is dollar cost averaging. Okay, when market is dropping, you keep adding a position, you keep average down your cost. Okay, so when market is rebounding, that also will make your investment returns become more lah. Okay, if you had average down your cost during a bear market. So at least from past history data, you can see the periods, okay, the time horizon of US market to having a very bullish movement is much more longer than the bear markets. Okay, so currently the market is in bear markets, but it also a reference for us to study whether the market will rebound to reversal and have a longer runs or not to upward movement. Yeah. Okay, so I explained all these are very brief factors that affect the economy. Okay, US macroeconomy that affecting US market. So just for your information, how can you start invest your money in US market? Okay, we available quite many product asset classes for our client to invest their money in US market. The first one, which is the most direct impact, is you invest in US stock. For example, you buy Nvidia share, you buy Apple share. So when company is making more money, is giving out more dividend, also will raise in their share price. Okay, so over the years, you collect the dividend, okay, or the appreciation in share price also will grow your capital over time lah. All right. So another one is trade US futures contract. Futures, if you rate futures compared to other asset class, it must be the most volatile and most risky product. Okay, if it's actually for more short-term trading. All right, so example, you can see MNQ, MYM, MAS. Actually, it's a code for the UF futures contract lah. Okay, micro E-mini Nasdaq, micro Dow Jones, and also micro S&P. So all these micro futures contract are the widely or most traded contract in US market. So if you interested to trade US futures contract, maybe this is the contract that you can looking for. But I will advise that if you trading US futures market contract, it will be very volatile if you compare to US stock. So maybe monitor your position well and know the risk of the market lah before you start to commit your money in the markets. It's very important to safeguard your capital before you making any profits from the markets. Yeah. So another one, invest in US stock unit trust fund. Yeah, so if you don't want to invest your money in US stock or US futures contract, okay, you want somebody professional manage your money for you, you can go for unit trust. Okay, if you're saying invest US stock, trade US futures contract, it's about you manage your money yourself. So if you don't want yourself to manage the money, you can pass it to our the professional fund manager. They will invest in several type of the unit trust fund. Okay, maybe you can choose for unit stock related one. So those fund manager will handle the money. Okay, you manage your money. Okay, to invest in US stock according their analysis. So in turn, you can making any positive investment return, like if they making any money from your capital. Yeah. So that's an advantage because you don't need to worry, or you need to analyze yourself because there's somebody professional manage for you. But the disadvantage is also depending on that fund manager performance, and also there's a management fee lah. Okay, you need to pay them, so they will manage the money for you. So other than these three, the last one we have is invest in US index ETF. Okay, US index ETF, for example, we have DIA, SPY, VO, and QQQ. So all these are the code for Dow Jones, Nasdaq, and also S&P index ETF. Okay, for example, today you don't want to invest in stock, you don't want to trade futures contract, and you don't want to pay management fee to unit trust fund manager. So I would suggest you invest in ETF. ETF is a bit similar if you investing in US stock. Okay, but the difference is invest in US stock is subject to a single counter. Okay, maybe you invest in Avidia, maybe, but the company performance is going bad. Okay, it's subject to its particular single company performance. But if you invest money in ETF, okay, you will track overall index performance. For example, you invest in DIA ETF. If overall Dow Jones index is going up, okay, you will making a positive rate of return. Basically, if you're investing in DIA, ETF, SPY, you're investing in the overall index already. So you don't need to worry, is there any particular single company will affect your overall investment return? So this is the very good investment instrument, and I believe this is also suitable for beginner client who want to first start trading your money in US market. Yeah, so with Philip Capital, we available for all these instruments, and we believe that that's the one that will suitable for you lah. Okay, so if you're interested, maybe you can get assistance from our dealer, so we can assist you and advise which is the product that works best for you. Okay, so I think I coming to the end of the sessions already. So I believe whatever I shared today is helpful for you. I know that it's quite brief and general, but I hope that it able to help you to understand what the relationship behind between macroeconomic indicators and also market movement and the recent market news. Okay, so if there is any Q&A from the floor, if you have any question, you can drop in the chat box so I can go through one by one. Okay, any questions? Okay, I saw one questions come in. Okay, how to choose suitable investment instrument if you want to invest my money? Okay. So as I mentioned just now, we available for US stock, US futures, and also unit trust fund and also ETF. Okay, the first one, before you want to kickstart your trading or investment, okay, you need to ask yourself, what's your time horizon? What's your preference? If you want to a very short term, you want to have a very quick movement, I would suggest you go for futures because a market is very volatile. You're able to profit in very short period of time. So that's the best thing of the trading in volatile markets, okay? Because of the futures calculations. But you need to also aware that if you're trading in futures market, that's a risk that you're losing the money in a very quick time. So if you are a short-term trader, you want to have a fast in, fast out transactions or trading, I believe futures market is the most suitable for you, and that's a possible for you to mix a very good profit. And if you're a long-term investor, okay, you want to park your unused money, okay, in some instrument, maybe over years, maybe over 10 years, then it will growing itself. I would suggest you go for unit trust fund or ETF. Okay, the most direct is the ETF because it will track overall market performance very naturally, very organic, without any subject to any fund manager performance or any single company movement lah. So that's one approach that widely used by ETF investor is DCA, okay? So periodically investing your money. So maybe every quarter you commit a little bit money to invest in ETF. Maybe 3 months once, or every month you invest a little bit of your unused money, extra money, okay, in ETF. So you keep contributing your money in ETF. So over the years, when ETF is going up higher and higher, your money will growing itself. Okay, you don't need to manage it. So another one is DCA. DCA is a dollar cost averaging. For example, you're already holding ETF. So, but market will not necessarily going up every month or every week. So if there's a huge retracement or huge bearish movement or drop down in the markets, you can invest another bullets or invest another money in the market, so you can average down your overall cost. Okay, you keep averaging down your cost when market is having a reversal to going to upward again, so you're able to convert your losses to profit in more faster. Okay, so yeah, back to the questions. How can I choose the most suitable instrument? It depends on your time horizon and your risk preference. So if you want to go for a safer one, you can go for ETF or stocks. You will go for a very volatile or very fast in and fast out time horizon, you can go for futures market, futures contract. All right. So I think there's no any more questions. Yeah. So before I ending today's sessions, if you have any inquiry, you can drop by our social media or contact us lah. Okay, there's an email or phones here. So we welcome any inquiries. If you have any inquiries, just feel free to drop in. So we able to assist you or schedule an online coaching or either physical coaching to help you. All right. So I think come to the end of my sessions already. Thanks for your joining. So I hopefully what I shared today is helpful and able to benefit for you lah. All right. So thanks for your time and goodbye. Have a nice rest for today.